A small market in Shakopee, Minnesota, enrolled in a federal food program in April 2020. Within weeks, it had opened 30 distribution sites across the state. It claimed to be serving 18 million meals to children. Federal prosecutors proved that at most of those sites, not one meal was ever served. The sites were parking lots, vacant storefronts, empty commercial spaces with no kitchens, no staff, and no children. That single operation collected $47 million before anyone stopped it. $47 million, moved through fake rosters and phantom children in a suburb of Minneapolis. And it was not even close to the largest piece of the machine. By the end of this investigation, you will understand exactly how $9 billion hemorrhaged out of programs designed to feed children, house the elderly, and treat autism. You will be able to name the mechanism. You will be able to trace every transfer point. And you will never look at a government social services program the same way again. The machine was built by a woman named Amy Bock. She had spent years inside Minnesota's daycare and education system. She understood the programs from the inside. She knew which oversight gaps had never been closed. In 2016, she founded a nonprofit called Feeding Our Future. The nonprofit applied for state grants and was rejected multiple times for mismanagement concerns. State officials had flagged her organization as early as 2019. Internal documents show regulators identified meal claims they considered implausible before the pandemic started. Former state employees said Bock pressured workers who raised questions within weeks of the organization's first submissions. Officials began documenting her concerning behavior. Their reports were filed, their concerns were noted, and the payments kept going out anyway. When scrutiny intensified, Feeding Our Future filed a lawsuit against the state alleging racial discrimination. A state auditor later confirmed that the threat of that lawsuit directly affected government decision-making. The state backed down. Payments resumed. Then the pandemic arrived and everything accelerated. The federal government flooded child nutrition programs with emergency funding overnight. Documentation requirements were loosened to speed access for families in need. That loosening was the crack in the foundation Feeding Our Future had been waiting for. Here is exactly how the capital moved. The federal government wired money to the Minnesota Department of Education. The Department of Education transferred it to sponsor organizations like Feeding Our Future. Feeding Our Future approved meal sites, restaurants, and food vendors claiming to distribute meals. Each site submitted daily meal count sheets listing children fed. The counts were supposed to be verified before payment was released. They were not verified. Feeding Our Future collected the federal reimbursements and paid the sites. The sites submitted invoices. The invoices were stamped. The wire transfers went out. No site visits, no audits, no confirmation a single child had eaten. This is not a secret. The structure is public record. Most people just never had a reason to look. One defendant claimed his network served 40,000 meals to children per week. Federal prosecutors said the actual count was close to zero. He collected $1.1 million. The scheme spread because the barrier to entry was almost non-existent. Any entity could register as a meal site. Any entity could submit meal counts. Any entity could collect payment before a single field verification occurred. Within months, the operation had metastasized to dozens of sites across Minnesota. Prosecutors recovered rosters submitted to justify the payments. The rosters listed children by name at each distribution site. The children on those rosters did not exist. The internal ledger for this specific machine and the full court document trail have been archived in the vault for those who need the hard proof. By January 2022, FBI agents raided Feeding Our Future locations across Minnesota. By that point, the organization had collected $250 million in federal child nutrition funding. The United States Department of Justice called it the largest pandemic-era fraud scheme ever prosecuted in American history. 79 people were eventually indicted. Amy Bock was convicted on 7 federal charges, including bribery, in March 2025. Now here is the fact that stops everything. One defendant alone was sentenced to 10 years in prison and ordered to repay $47 million. His operation claimed to have served 18 million meals to children across more than 30 sites. At most of those sites, the Shakopee public schools were the ones actually feeding the children. His sites were parking lots. He spent his proceeds on a $64,000 truck. 6 weeks later, a $35,000 SUV. He flew to the Maldives for his honeymoon and stayed in a private villa paid for with child nutrition money. He spent $30,000 on jewelry in Dubai using the same funds. He paid a company called PayMeToDoYourHomework.com $12,000 to earn his college degree. A program designed to feed hungry children paid for the diploma. He was 24 years old. Prosecutors found defendants had laundered money through shell companies in Kenya and the United States. An oceanfront resort in Kenya was forfeited in one plea agreement. An apartment in Nairobi, a luxury suite at a professional basketball game billed to the children's nutrition program. 63 of 79 defendants had been convicted as of early 2026, and federal prosecutors said, "Feeding our future was just the beginning," because the identical mechanism had already moved into other programs. The Housing Stabilization Services Program was built to help seniors and disabled people find housing. It launched in 2020 with a projected annual cost of $2.6 million. By 2024, it was hemorrhaging $104 million per year. That is 40 times its original estimate in 4 years. The program had what prosecutors described as low barriers to entry and minimal records requirements. Any provider could enroll. Any provider could submit invoices. Any provider could collect Medicaid payments before a single service was verified. In 2025, 2 men from Philadelphia heard that Minnesota programs were easy money. They flew to Minnesota. They enrolled their companies as housing providers. They flew back to Philadelphia. They submitted fraudulent claims remotely and collected $3.5 million. Prosecutors called it fraud tourism. Minnesota shut the Housing Stabilization Program down entirely in August 2025. Federal prosecutors had already found the same pattern, running inside a Medicaid autism therapy program for children. Fraudsters created fake treatment firms and approached parents in shopping centers. They billed the state for therapy sessions that never happened. They paid parents kickbacks of up to $1,500 per child enrolled. The lead federal prosecutor said the autism case was not isolated. 14 programs in total. The same mechanism running inside every single one. This is not the first time a system built on unverified claims became an extraction engine. In 1929, investment trusts collapsed under the weight of phantom assets. Entities submitting claims on value that did not exist. The paperwork was immaculate. The underlying reality was not. In 2008, the mortgage servicing industry processed payments on loans that had already defaulted. The volume of claims moved faster than any verification system could process. Both times the machine kept running because the gap between submission and confirmation was wider than anyone admitted. Warren Buffett wrote in 2002 that complexity in financial structures almost always exists to obscure rather than explain. Minnesota's programs were not complex. They were the opposite, deliberately simple, deliberately low barrier, deliberately difficult to audit at scale. And a 2024 state auditor report confirmed that officials raised fraud concerns early and kept approving payments anyway. The report found that fear of discrimination accusations froze government action. The machine used institutional paralysis as a firewall. Behind that firewall, the invoices kept moving and the wire transfers kept clearing. Once you see this mechanism, you will not be able to unsee it. Every social services program in America runs on the same architecture. Federal money flows to states. States flow it to program administrators. Administrators flow it to providers. At every transfer point, there is a moment where verification must occur. In Minnesota, that moment was skipped. Not in one program, across 14 programs, for years. The children those programs were built to feed were real. The elderly people those programs were built to house were real. The children with autism those programs were built to treat were real. The rosters, the invoices, and the meal count sheets were not. Every time you file a federal tax return, a fraction of that payment enters programs structured exactly like these. Programs where a provider can submit a claim today and receive a wire transfer before anyone visits the address. In December 2025, a federal prosecutor stood at a podium and named the number. Half or more of $18 billion may have been stolen from 14 Minnesota programs since 2018. He called it the $18 billion question. $18 billion is more than the entire annual Medicaid allocation Minnesota receives from the federal government. It is more than the total value of every bank robbery ever committed in United States history combined. And it moved not through a heist, but through invoices stamped by administrators who were afraid to ask questions. The FBI director said publicly that what has been charged so far is just the tip of a very large iceberg. Right now, in 2026, the investigation is still open. Charges are still being filed. The machine is still being mapped. The capital hemorrhaged into shell companies, overseas accounts, and private villas. The investigation is still open, and the final number has not been determined. If you want to see the machines before they break, join the investigation by subscribing now. The full source list, court records, and the complete document trail are inside the vault. Link in bio. This is Luxona.